Bitcoin price surpasses $71,000. The price of Bitcoin has exceeded the $71,000 mark. The last time the top cryptocurrency by market capitalization reached this level was on April 12. Over the past 24 hours, Bitcoin has increased in value by 6.6%. Bloomberg ETF analysts Eric Balchunas and James Seyfarth have raised the chances of approval for spot Ethereum exchange-traded funds, ETFs, from 25% to 75%. The reason for this increase is the intensifying political pressure on the U.S. Securities and Exchange Commission, SEC, which is increasingly being accused of overstepping its authority. On the prediction platform Polymarket, the ratio of votes in favor of the regulator approving spot ETH/ETFs has risen to 61%. Amid the optimistic sentiments surrounding the Ethereum-based instrument, the cryptocurrency's price has surged nearly 20% in recent days, according to CoinGecko. Following ETH, the flagship cryptocurrency market leader BTC has also climbed. Previously, experts highlighted a number of issues hindering the launch of spot Ethereum ETFs in the US. In the crypto community, there are also increasing discussions that the SEC might soon recognize ETH as a security. If this happens, the instrument may never appear on the market. The sharp surge led to significant liquidations. According to CoinGlass, the total amount of liquidations in the cryptocurrency market over the past 24 hours was $348.13 million. Short positions accounted for $273.82 million, while longs accounted for $74.31 million. A month of short positions on Bitcoin was just liquidated. There's one more step left for traders to exit shorts, which could lead to BTC's price reaching new record highs, noted well-known crypto analyst Willy Woo. Prior to the rapid growth, investors actively purchased BTC, indicating their bullish sentiments. Over the past week, they withdrew about 30,516 BTC from cryptocurrency exchanges, totaling $2.17 billion. The largest outflow was from Coinbase Pro, from which 14,416 BTC were withdrawn, followed by Binance with an outflow of 8,631 BTC. Typically, the withdrawal of cryptocurrency from centralized exchanges is considered a positive indicator. Investors prefer to hold their assets, expecting further price increases, rather than planning to sell them in the short term. Crypto community unimpressed with new CryptoPunks NFT collection. On May 20th, a new collection of non-fungible tokens, NFTs, called Super Punk World was released, which did not receive a warm welcome from the community. Yuga Labs CEO Greg Solano responded to the community's reaction by announcing that his company would no longer work on CryptoPunks. The NFT collection will become fully decentralized. Super Punk World is a collection of 500 hybridized 3D sculptures. The idea is to blur the boundaries between race and gender and to rethink the essence of virtual and real identity. This is the first collection created by Yuga Labs under the CryptoPunks brand. The company, creator of the Bored Ape Yacht Club, acquired the rights to the CryptoPunks collection in March 2022. At the time, Yuga representatives stated that they wanted to bring additional value to CryptoPunks. To create the new avatar collection, the platform invited New York artist Nina Ebony. According to Ebony, the digital characters combine her artistic style and pay homage to early Web3 projects, particularly CryptoPunks. Additionally, they also raise sharp social issues such as racism and sexism. However, despite the intriguing concept, some members of the cryptocurrency community harshly criticized Ebony's NFT collection. Some users condemned the artistic style and the concept of rethinking the iconic CryptoPunks project. Others accused Nina Ebony of inciting hatred in the community with her work that emphasizes race and gender. Serious question, did you even ask collectors if this was a good idea? Wrote one user. Collector Quarry.Sats on X noted that erasing the boundaries between genders is the dumbest idea that came to the CryptoPunks brand's representatives. He advised the team to leave Yuga Labs and move on. Yuga CEO Greg Solano responded to the community's negativity. In a message, he stated that his company would no longer be involved with punks. The collection will become fully decentralized. Our plan is to ensure that Nina's final collection reaches those who support her work, so we will make it available only to Super Cool World owners. We are considering a distribution option via airdrop, he also noted. The artist confirmed Yuga's plans and thanked the project for its support. In her tweet, Ebony also condemned the attacks from the crypto community. I am extremely uncomfortable with some of the racist, sexist, homophobic, and transphobic comments made during the discussions around our project. I am now more determined to continue my mission of creating an inclusive community where everyone is accepted and ideas that lead to productive dialogues are welcomed. Hate is unacceptable, she wrote. Coinbase to launch oil and gold futures trading. The American cryptocurrency derivatives exchange Coinbase has announced the expansion of the list of futures available on its platform. According to a press release from the platform, futures contracts for oil and gold will be available on Coinbase. The Coinbase Derivatives Exchange is a separate entity regulated by the U.S. Commodity Futures Trading Commission, CFTC. Currently, the platform offers trading in futures for Bitcoin, Ethereum, Bitcoin Cash, Litecoin, and Dogecoin. Digital asset futures remain the core business of the Coinbase Derivatives Exchange. However, the platform wants to offer investors the opportunity to cross-hedge between asset classes. Contracts for forward positions, namely gold and oil, will appear on June 3 under the tickers NOL and GLD. The futures volume will be 10 barrels of oil and 1 troy ounce of gold. All settlements will be made in US dollars. We believe that providing our customers with access to futures for traditional commodities such as oil and gold, alongside cryptocurrencies, is a natural expansion of our product range, the release states. Futures allow traders to profit from price movements and hedge existing assets. Coinbase launched such contracts last year amid ongoing battles with U.S. regulators. The legal battle with the U.S. Securities and Exchange Commission, SEC, began for Coinbase in June 2023. According to the regulator, the platform illegally traded at least 13 securities in the form of digital assets. In March of this year, the conflict escalated. The court partially granted the cryptocurrency platform's motion to dismiss the SEC's lawsuit. The exchange's crypto wallet will no longer be part of the case. However, on 2 other issues, the judge sided with the agency. In early May, Coinbase faced another lawsuit, this time from a group of investors. They claimed that the cryptocurrency exchange knowingly and intentionally violated California securities laws. The plaintiffs demand that the platform compensate them for all losses. Gala Games becomes victim of $214 million hack. An unknown attacker hacked the Web3 gaming project Gala Games. The perpetrator exploited a vulnerability in the platform's smart contract, withdrawing 5 billion Gala tokens worth $214 million. The Gala team resolved the issue and stated that they are working with law enforcement to identify the hacker. After hacking the smart contract, the perpetrator sold 592 million Gala tokens for 5,952 Ethereum, which is valued at $21.8 million at the current exchange rate. The developers of Gala Games wrote that they detected the compromise and took all necessary measures within 45 minutes to minimize damage. Specifically, they blacklisted the hacker's address, thereby freezing the possibility of further withdrawals. Currently, the project team is working with law enforcement to locate and track the cyber criminal. This was an isolated incident, the cause of which we have already addressed. We will publish updated information as the investigation continues and will take all necessary steps to prevent future incidents, the Gala statement reads. Gala Games CEO Eric Skiermeyer confirmed the hack and emphasized that the Ethereum smart contract for Gala is now secure. According to him, the remaining 4.4 billion tokens held by the attacker were frozen and burned by the project developers. We violated the internal control system. This should not have happened, and we are taking all necessary measures to ensure it does not happen again. We have identified the perpetrator's address and are currently working with the FBI, the U.S. Department of Justice, and a network of international agencies, Skiermeyer wrote on X. Solidity developer known as Quit noted that the hacker's address had administrator rights. This is what allowed the attacker to compromise the smart contract. Amid the hack, the price of Gala dropped by a total of 5.7% over the past 24 hours.